Welcome to Dave's Daily Crypto Take. Today is Wednesday, June 16th, 2021. Let's take a look at today's prices for today. So up first, we got at BTC Bitcoin number one, $39,994. At number two, Ethereum at $2,520, down 2.53%. Next up, number three, Tether at $1, steady at 0.00%. At number four, Binance Coin, $360.27, down 2.56%. At number five, Cardano at $1.54, down 1.17%. Number six, Dogecoin, 31 cents, down 2.60%. Number seven, at XRP, 86 cents, down 2.81%. At number eight, USD Coin at $1 and just steady at 0.01%. Polkadot at number nine, $23.76, down 6%. And rounding out at number 10, Uniswap at $23.16, 4% down. All right, let's take a look at the Crypto Fear and Greed Index. So for the Crypto Fear and Greed Index, it talks about what the market and what the people are thinking about. With extreme fear can be a sign that investors are too worried. That could be a buying opportunity. And when investors are getting too greedy, that means the market is due for a correction. So today, the Crypto Fear and Greed Index is 33. So it's fear. Yesterday it was also fear, but at 38. Last week was extreme fear at 14. And as of today, from last month, it was fear at 27. So today we got 6 articles, and I'm just going to give you an index of what they are. Article number one is Cardano surpasses Coinbase, Roblox in market cap trails Vodafone by $0.9 billion. Article number two is the world's first real estate NFT just got sold. Why this is revolutionary. Article number three is China is kicking out more than half the world's Bitcoin miners, and a whole lot of them could be headed to Texas. Article number four is Bitcoin to get a major boost as large crypto firm plans to sell shares and buy $1 billion worth of BTC. Article number five is the big short investor Michael Burry is back on Twitter and warning of the biggest market bubble in history. And rounding out, article number 6 is 10 best crypto research tools you must have as an investor. All right. So again, thank you very much for tuning in. Let's take a look at article number one. Cardano surpasses Coinbase, Roblox in market cap and trails Vodafone by $0.9 billion. So the recent rise in Cardano's ADA popularity has led the asset to register a significant market capitalization, partly matching up and surpassing some traditional asset classes. Data acquired by Finbold indicates ADA market capitalization of $50.42 billion as of June 15, 2021 is higher than Coinbase's $49.43 billion. However, the ADA market cap slightly trails telecommunications giant Vodafone by $0.94 billion among the selected 11 publicly traded assets. Elsewhere, online gaming company Roblox market cap of $49.05 billion also falls behind Cardano. The company has gained dominance in the US iPhone market, recording $3 million in daily revenue as of June 2021. So if we take a look at the chart, Vodafone Group PLC is at $51.36 billion and Cardano at number two, $50.42 billion. And rounding out at number three is IDEXX Laboratories. And number four is Koninklijke Philips. And at number five, Dow Inc. So Cardano is in pretty good company right there. So it is worth mentioning that ADA and the selected assets are far from different backgrounds besides Coinbase. ADA is a relatively new asset. However, the market cap figure highlights the cryptocurrency's tremendous journey since launching. Furthermore, although ADA has a significant market compared to the selected companies, some institutions have an upper as they manage assets equivalent to trillions of dollars. Notably, like traditional stocks, ADA holders can benefit when the asset's price surges. So the ADA records influx of capital. In general, ADA's market capitalization results from the recent cryptocurrency bull run and the ongoing activity on the network. On a year-to-date basis, ADA has surged by over 750%, ranking as the fifth largest cryptocurrency by market cap. ADA's ability to match up to traditional asset classes in the market cap also relates to the bullish momentum throughout the year. The cryptocurrency has attracted attention and inflow of capital from investors seeking to profit. The growth has resulted in several millionaire investors. Our previous research showed that between January 1 and May 17, 2021, wallets holding ADA with a value of at least $1 million surged 1,200% from 504 to 6,710. Elsewhere, the network has witnessed increased adoption with real-world use cases giving more exposure to ADA. Cardano signed a deal with the Ethiopian government to streamline the country's education system by helping teachers and students share resources to improve performance. ADA is also finding its way into the payment sector after Maltese property company Dreamflats rolled payments in the crypto for rental contract payments. The payments will be for Zaha Hadid Architects, Mercury Towers building. Cardano gaining prominence with network development. Furthermore, the Cardano network development continues to boost investor confidence in digital currency. For instance, the Cardano blockchain attained 100% decentralization in block production, a major milestone in crypto circles. With the crypto sector recording an influx of more capital, especially from institutional investors, Cardano highlighted its commitment to build a system that will process billions of transactions annually. Furthermore, as part of boosting decentralization, Cardano also released a new version of the Cardano node version, Alonzo Blue 2.0, to the test net. In early June, the blockchain Cardano announced that it was researching on the stable fees. This system works towards rolling out a base price for transactions by pegging to a group of currencies focusing on fairness and predictability. With the continued growth of Cardano blockchain, the market cap will likely keep gaining momentum further and further. So again, Cardano surpasses Coinbase, Roblox in market cap, trails Vodafone by $0.9 billion. Let's look up at article number 2. The world's first real estate NFT just got sold and why this is revolutionary. NFTs are proving to have more value than just hawking ridiculously expensive gifts. The world's first non-fungible token NFT property was sold, and it's about to shake up the entire world in the same way Uber upended the cab industry. NFTs are digital doohickeys that many can't wrap their minds around, and with good reason. Blockchain-based memes, tweets, GIFs, and artwork are being sold for millions. Why on earth would someone pay so much money for something intangible? So even as tech pundits explain that creators use NFTs to certify their masterpieces as authentic and original, the concept of NFTs still flew over people's heads. As such, NFTs were slammed as being scams or brushed off as another absurdly indulgent hobby of the rich and famous. However, now that NFTs are shaking up the real estate industry, non-fungible tokens may be more valuable than we thought. So the world's first real estate NFT sale kicks off disruptive precedent. TechCrunch founder Michael Arrington made history in 2017 when he purchased the world's first blockchain-backed apartment on Proppy, a tech-forward real estate platform that seeks to revolutionize home purchasing. Fast forward to 2021, and Arrington auctioned off his NFT-minted Kiev-based studio apartment for 36 ETH, approximately $93,000 as of this writing. For the uninitiated, NFTs typically run on the Ethereum blockchain, which stores smart contracts. To keep it short and simple, smart contracts are lines of code that describe a set of rules that need to be met before money can be unlocked and transferred. And you don't need a meddling third party to facilitate the transaction. For those who are familiar with real estate, smart contracts might sound awfully similar to putting one home in escrow, a legal apartment in which a third party temporarily halts the transfer of money or property until a particular condition is met. As such, the Ethereum blockchain is becoming increasingly attractive as a new avant-garde avenue for real estate transactions. Instead of hiring an escrow officer, for example, buyers and sellers can simply rely on Ethereum-based smart contracts. It doesn't stop there. As mentioned, NFTs also certify ownership, which made it easy for Arrington to digitally transfer his property rights to the highest bidder. The sale is then recorded on the Ethereum blockchain. The traditional current way of transferring property ownership is a pain in the ass. It's pricey and labor intensive. NFTs minimize paperwork. NFTs could disrupt the lending industry. It gets better. Not only can NFTs aid with tokenizing ownership and streamlining contracts, but it can help property owners use their homes as collateral for loans, sans the convoluted approval process. As it stands now, you can already use cryptocurrency to secure a loan. For example, if you have $10,000 worth of BTC, crypto lending platform Nexo will loan you half of your collateral value, $5,000. Crypto lenders won't check your FICO score, nor will they put you through a grueling approval process. Why? Because they have access to your BTC if things go awry. As a cherry on top, crypto-backed loans have a quick turnaround time. In the same way, real estate owners can use their NFT minted homes to borrow money quickly and efficiently without using banks and the mind-warping process of proving one's credit worthiness. Imagine I could buy a house as an NFT and instantly borrow against the NFT with a 2 to 4% interest rate. Why would I ever go through a brain damage of using Wells Fargo or Chase with their months of nightmare due diligence? Asked Henry Elder, president of International Blockchain Real Estate Association. So the bright future of NFTs. NFTs aren't taken seriously by many. How could you blame them? An NFT of the infamous Shiba Inu meme, now associated with Dogecoin, recently sold for a whopping $4 million. You can't help but chuckle at the absurdity. Fortunately, despite the ridiculous $1 million sales of frivolous gifts and memes, it seems as if NFTs have found their value in the real estate industry. Holding an NFT deed streamlines the process of putting one's home in escrow, transferring ownership rights, securing loans via collateral, and refinancing one's mortgage, and more. So yes, we got the world's first real estate NFT and just got sold. And this is why it's revolutionary. Article number 3 is China is kicking out more than half the world's Bitcoin miners, and a whole lot of them could be headed to Texas. Let's take a look. In May, Beijing called for a severe crackdown on Bitcoin mining and trading, setting off what's being dubbed in crypto circles as the Great Mining Migration. Texas is an ideal destination for miners, thanks to its abundance of solar and wind power, its unregulated market, and its crypto-friendly political science. So, China has long been home to more than half the world's Bitcoin miners, but now Beijing wants them out ASAP. In May, the government called for a severe crackdown on Bitcoin mining and trading, setting off what's being dubbed in crypto circles as the Great Mining Migration. This exodus is underway now, and it could be a game changer for Texas. Mining is the energy-intensive process which both creates new coins and maintains a log of all transactions of existing digital tokens. Despite a lack of reserves that caused days-long blackouts last winter, Texas often has some of the world's lowest energy prices, and its share of renewables is growing over time. With 20% of its power coming from wind as of 2019, it has a deregulated power grid that lets customers choose between power providers, and crucially, its political leaders are very pro-crypto. Dream conditions for a miner looking for a kind welcome and cheap energy sources. So you're going to see a dynamic and dramatic shift over the next few months, said Brandon Aragani, previously a security engineer at crypto exchange Gemini, We have governors like Greg Abbott in Texas who are promoting mining. It is going to become a real industry in the United States, which is going to be incredible. So China's mining dominance. Well, for 2021 data for the global distribution of mining's power is not yet available, but past estimates have shown that 65 to 75% of the world's Bitcoin mining happened in China, mostly in four Chinese provinces: Xinjiang, Inner Mongolia, Sichuan, and Yunnan. Sichuan and Yunnan's hydropower make them renewable energy meccas, while Xinjiang and Inner Mongolia are home to many of China's coal plants. The drawdown in miners has already begun in Inner Mongolia. After failing to meet Beijing's climate targets, province leaders decided to give Bitcoin miners 2 months to clear out, explicitly blaming its energy misses on crypto mines. Castle Island Ventures founding partner Nick Carter says that while it's not totally clear how China will handle its next steps, a phased rollout is likely. It seems like we're going from policy statement to actual implementation in relatively short order, he said. This way, this exodus is measured is by looking at hash rate, an industry term used to describe the computing power of all miners in the Bitcoin network. Given the drop in hash rate, it appears likely that installations are being turned off throughout the country, continued Carter, who also thinks that probably 50 to 60% of Bitcoin's entire hash rate will ultimately leave China. Although China's announcement hasn't been cemented in policy, that isn't stopping miners like Alejandro de la Torre from cutting their losses and making an exit. We do not want to face every single year some sort of new ban coming in China, said De La Torte, vice president of Hong Kong headquartered mining pool Pulin. So we're trying to diversify our global mining hash rate, and that's why we are moving to the United States and to Canada. One of Bitcoin's greatest features is that it's totally location agnostic. Miners only require an internet connection, and unlike other industries, that must be relatively close to their end users. The cool thing about Bitcoin that is unappreciated by a lot of that naysayers is that it's a portable market. You can bring it right to the source of energy, said Steve Barber, founder of Upstream Data, a company that manufactures and supplies some portable mining solutions for oil and gas facilities. That said, the exodus won't be instantaneous, in part because it will take miners some time to either move their machines out of China or liquidate their assets and set up shop elsewhere. So, what are they going to do? Where they're going? Because miners at scale compete in a low margin industry where their only variable cost is typically energy, they are incentivized to migrate to the world's cheapest sources of power. Every Western mining host I know has had their phones ringing off the hook, said Carter. Chinese miners or miners that were domiciled in China are looking to Central Asia, Eastern Europe, and US and Northern Europe. One likely destination is China's next door neighbor, Kazakhstan. The country's coal mines provide a cheap and abundant energy supply. It also helps that Kazakhstan has a more lax attitude about building, which bodes well for miners who need to construct physical installations in a short period of time. Nibar Debokov runs Zaiv, a company that provides hosting services to international miners. Zaiv also sells the specialized equipment needed for mining. Bikwab says that he stopped counting the number of Chinese miners who have called him to ask about relocation options, ranging from the operations with 15 rigs to thousands. One miner told us that only government electricity plants have restricted mining and private ones will continue to service miners, Bekbuov told CNBC. But most of the electricity is generated by government power plants, so miners will have to move. That makes them uncertain and desperate to find other locations, he said. Whether Kazakhstan is a destination or simply a stopover on a lower or longer migration west remains to be seen. Arvgani is bullish on North America and thinks the hash rate there will grow over the next few months. Texas is not only has cheapest electricity in the US, but some of the cheapest in the globe, he said. It's also very easy to start up a mining company. If you have $30 million, $40 million, you can be a premier miner in the United States. Wyoming has also trended towards being pro-Bitcoin and could be another mining destination, according to Arva Nagai. There are, however, a few major limitations to the US becoming a global mining destination. For one, the lead time to build the actual physical infrastructure necessary to host miners is likely 6 to 9 months. Carter told CNBC, the US probably can't be as nimble as other countries in terms of onshoring these stray miners, he said. The move logistics may also prove difficult. There is shipping container shortage thanks to the tailwinds of the COVID pandemic. But perhaps the biggest question is the reliability of the Texas power grid, a storm that devastated large swaths of the state in 2021 has reignited a debate over whether Texas should winterproof its system, a potentially costly project that might affect taxes or other fees for those looking to tap into the state's power grid. More recently, ERCOT, the organization that operates Texas grid, asked consumers to conserve energy amid what officials called an unusual number of forced generation outages for an upcoming heat wave. So the next question is answering the Musk critique. Tesla CEO Elon Musk has bashed Bitcoin mining, claiming that it is bad for the environment. It's not a new criticism. For years, skeptics have maligned the world's most popular digital token for polluting the planet, while supporters have extolled the virtues of Bitcoin and its role in accelerating the rise of renewable energy. It is unclear whether the China mining exodus will make or break the case for Bitcoin enthusiasts in the debate around the token's carbon footprint. Dominant narrative to date has been that much of the world's Bitcoin is mined with Chinese gold. From a narrative perspective, it's definitely an improvement, said Carter. But China also has the most abundant stranded hydro resources in the world. The country offers significant energy vectors from wind, solar, and especially hydropower in the south. Xinjiang's grid, for example, are 35% powered by wind and solar energy inputs. If all the miners do end up leaving China, it will mean less fossil fuel powered mining, but it will also mean that the network's share of renewable energy powered mining will drop. This is why the question of whether these migrant miners end up could prove critical to Bitcoin's future. It's the biggest story of the year for Bitcoin, said Carter. De La Torre says they're looking to expand operations using green energy, a trend that is already years in the making. He says that hydro plants are generally cheaper than fossil fuels in most parts of the world. Mining is price sensitive, so as to seek out the lowest cost power, and the lowest cost power tends to be renewable because if you're burning fossil fuels, it has extraction, refinement, and transport costs, explained Blockstream CEO Adam Back. Each year, the investment bank Lazard releases a breakdown of energy costs by source. It's a 2020 report shows that many of the most common renewable energy sources are either equal to or less expensive than conventional energy sources like coal and gas. And the cost of renewable power keeps going down. But there are limitations to running crypto mines purely on renewable energy. Though solar and wind are now the world's least expensive energy sources, both power supplies face limitations at scale, so there is concern over the viability of miners turning exclusively to wind or solar energy. So what is the next 6 months going to look like? For the time being, there isn't that much mining capacity worldwide that is ready to absorb the Chinese miner diaspora. While they scramble to find a new home, we could see hash rate go offline and stay offline. In practice, that would mean all the remaining miners are more profitable for a period of time. Having more geographic dispersion would even out the global balance of power and would also reduce the ability of any one sovereign nation to co-opt or control the network. We may also see special crypto economic zones pop up in the next few months. You will see jurisdictions adopting a very favorable stance in creating the equivalent of special zones to encourage miners to host locally, said Carter. We're seeing it at the state level here. You're also going to see it at the country level. You might even see subsidized electricity for mining. So this article shows that China is kicking out more than half the world's Bitcoin miners, and a whole lot of them could be headed to Texas. what an interesting point that could be. So we're at the halfway point right now of Dave's Daily Crypto Take. I just like to take this time to say thank you to all my subscribers and listeners. This channel is fairly new, so I love all the support you've been giving, all the likes, all the shares that you've been doing. Again, I just want to say thank you. Please listen to me in the Apple Podcasts, Spotify, Google Podcasts, and also YouTube. Please share it so that more ears, more eyes can have a look at these updates and news on a daily basis. And again, thank you for your support. Let's keep on going. So article number 4 is Bitcoin to get a major boost as large crypto firm plans to sell shares and buy $1 billion worth of BTC. So there are 3 things in this article. Number 1, MicroStrategy is buying $500 million worth of Bitcoin. 2, the firm will share shares to purchase a further $1 billion worth of BTC. And 3, it's good for the market. So it appears that MicroStrategy, a firm that deals business intelligence and has vast Bitcoin holdings, isn't done buying yet. After pledging around $500 million to buy more BTC, MicroStrategy is now planning the next big move that could give it enough money to buy $1 billion worth of Bitcoin. The $500 million come from the firm's sale of senior debt notes. Sell shares to buy Bitcoin. Well, the firm has notified the US SEC of its intent to launch a sale window for its Class A common stock. It is partnering with Jefferies LLC. This arrangement is an open market sale agreement to allow MicroStrategy to sell shares via the intermediary. The sale windows can be opened and closed at any time. The company plans to dispose of $1 billion worth of shares and use the proceeds to purchase more Bitcoin. The CEO, Michael Saylor, broke the news in a tweet. The company has also detailed its plan in an official blog post. In Michael Saylor's Twitter account, he updates, MicroStrategy launches at the market securities offering for flexibility to sell up to $1 billion of its Class A common stock over time. So MicroStrategy has been buying BTC in large numbers since August last year, when the crypto's price was still in the lower ranges. The firm is currently the top Bitcoin holder among publicly listed companies. It holds around 92,079 BTC with an estimated value of about $3.7 billion. MicroStrategy has made good profits from its crypto holds, having bought the coins at an average cost of $24,450 each. This could explain its renewable appetite to accumulate more Bitcoin, especially now that the market looks bullish. So what are the effects? Well, MicroStrategy CEO Michael Saylor has been an influential figure in the crypto community. He recently arranged a meeting between Tesla CEO Elon Musk and members of the Bitcoin Mining Council to find a way forward in the quest to introduce green energy in Bitcoin mining, and an event that is to thank for the cryptocurrency price recovery. If MicroStrategy is used to expected $1 and $1 billion to buy BTC, it will add roughly 25,000 BTC to its stash at the current cost of around 40K a piece. The continued accumulation by such big players will help keep BTC afloat and keep fueling and possibly fuel the next big bull run. So yes, Bitcoin to get a major boost by Michael Saylor's MicroStrategy, and the crypto firm plans to sell shares and buy $1 billion worth of BTC. So article number 5, we've got a financial celebrity. The Big Short investor, Michael Burry, is back on Twitter and warning of the biggest market bubble in history. So 3 things from this article. Michael Burry said markets were in a bubble of unprecedented scale. 2, the Big Short investor tweeted his dire warning after a 10-week break from Twitter. And 3, Burry has flagged reckless speculation on Tesla stock, Bitcoin, and other assets. So Michael Burry on Tuesday warned of the biggest market bubble in history, suggesting that his concerns about rampant speculation only grew during his 10-week hiatus from Twitter. People always ask me, what is going on in the markets? The investor tweeted, it is simple. Greatest speculative bubble of all time in all things by 2 orders of magnitude. Hashtag flying pigs 360. The hashtag was likely a reference to a famous saying in investing: bulls make money, bears make money, but pigs get slaughtered. Burry has repeatedly told investors that they're being too greedy, speculating wildly, shouldering too much risk, and chasing unrealistic returns. The Scion Asset Management chief deleted his Twitter profile in early April after sounding the alarm on Tesla stock, which he's short, as well as GameStop, Bitcoin, Dogecoin, Robinhood, SPACs, inflation, and the broader stock market. He resumed tweeting on Monday. Burry is best well known for his $1 billion bet against the US housing bubble in the mid 2000s, which was immortalized in the book and the movie The Big Short. He also helped lay the groundwork for GameStop's comeback this year as he bought a stake in the video game retailer in 2019 and wrote several letters to its board. The investor who has complained many times about his warnings being ignored has Cassandra as his display name on Twitter, a reference to the priestess from Greek mythology who was cursed by the gods to share true prophecies but never to be believed. Burry's latest tweet echoed his other cautions. For example, he's compared the hype around Bitcoin, electric vehicles, and meme stocks to the dot-com and housing bubbles, and said this earlier in the year that the stock market was dancing on a knife's edge. So, yeah, the Big Short investor Michael Burry is back on Twitter. We're going to go on to our last article of the day, and it's a good one. We're going to talk about the 10 best crypto research tools you must have as an investor. So, cryptocurrency has taken the world by storm, with over 4,000 cryptocurrencies launched since 2013. This has sparked the interest of beginner investors to join the industry. Being the most popular investment today, it's tempting to jump into the crypto world without sufficient knowledge due to the fear of missing out, FOMO. Investing in cryptocurrency is a risky venture. If you have no idea how to research and analyze cryptos, but with the right crypto research tools, you can gather the information you need for nearly all cryptocurrencies and make an informed investment decision. So, the must-have crypto research tools for beginner investors. Whether you're a beginner or you've been a crypto investor for years, crypto research tools can help you stay ahead of the game. Here are the 10 of the best crypto research tools that you can use to refine your research before investing in cryptocurrency. Number 1, Messari. Messari is a crypto data aggregator with loads of helpful tools to analyze charts, allowing you to make better trading decisions. It has a Messari screener that you can use to sort coin information through various customized filters. You can view all the coin metrics in one window, and with the screener, from price, liquid market cap, coin categories, trading volume to sector. You can scout hidden gems to add to your portfolio using Messari's customizable features if you want to analyze coins in a certain sector. For example, you can quickly screen out coins, streamlining the process. The best part is that you can use Messari for free, but if you want to get the most out of this crypto research tool, you can upgrade to Messari Pro for as little as $25 per month. Number 2, Glassnode. Glassnode is an on-chain data and intelligence platform that offers plenty of metrics and insights. You can use Glassnode to unchain market indicators for any coin. The platform also provides data to help you analyze the exchange inflow and exchange the outflow for different coins. You can find out what's happening in the crypto market by viewing the number of new and active addresses. Glassnode offers free access to the platform. For a more advanced version, you'll need to go premium. Number 3, Lunar Crush. Lunar Crush is the most reliable social media provider in the crypto community. Social trends can have a significant impact on crypto prices, but keeping up with all the social media inside and outside the crypto ecosystem is nearly impossible, which is why Lunar Crush will do it for you. The platform uses artificial intelligence and machine learning to gather information about different cryptocurrencies on social media. Lunar Crush then reports statistical data from all the social media outlets, including Reddit and others from Google search volume, news activity, link popularity, and a whole lot more. You can use this information to make confident, data-driven trading decisions. Even better, Lunar Crush has a free plan so you can get the most out of the platform's most important functions. 4. Coin Metrics. Coinmetrics is a provider of crypto financial intelligence, market data, index, network data, and other analysis tools to help you make informed crypto decisions. The platform lets you access over 100 assets and 300 plus metrics so that you can analyze almost all charts and identify market trends. Once you've completed adding metrics to your chart, you can download it in different extensions. Number 5, Sentiment. Sentiment is another crypto research tool that deserves a close look. Like Glassnode, Sentiment provides on-chain and social media data on 1,500 plus cryptocurrencies, helping you to predict the price movement of any crypto. The platform also offers fundamental insights and behavioral reports so you can stay ahead of imminent developments. What's more, you can set up alerts on Sentiment to get updates whenever a coin you're watching gets a surge in social volume. 6. CoinGecko. You've probably heard of CoinMarketCap, but you may not be familiar with CoinGecko. CoinGecko is one of the largest data aggregators that tracks cryptocurrency prices by market cap. You can view live price changes for more than 7,800 coins and over 450 exchanges. Apart from tracking and measuring coins and tokens by market cap and exchanges, by trading volume, the platform provides an in-depth analysis of the crypto market. CoinGecko also provides community stats for Facebook, Twitter, Reddit, and more. There are many other useful features you can capitalize on to get a broad overview of a particular cryptocurrency with CoinGecko. 7. CoinMarketCal. The crypto industry is a buzzing economy, bringing about tons of market events that might affect price movements. This makes it impossible to keep tabs on events from the crypto world if you don't use crypto research tools like CoinMarketCal. CoinMarketCal is a cryptocurrency calendar that updates you all about upcoming events on different coins. The platform incorporates evidence-based and community-driven frameworks, letting people add crypto events, which later undergo verification. Real events get upvotes, while those that seem fake get downvotes. If you're interested in certain events that you think will likely impact the specific crypto price, for example, simply search the coin on the platform. With a few clicks, you'll see all the listed events for the selected period. Number 8, Coindance. Coindance is a very heavy data crypto research tool you may want to check out. The platform tracks all sorts of metrics, including hash and hash rates, network nodes, fees, block sizes, and mining breakdowns. You can also sort data by country to see how crypto adoption is going globally. With Coindance, you can also see other top-level stats covering blockchain, price history, search volume, market capitalization, demographics, and more. The platform is community-driven, meaning miners can vote the validity of the information provided by the community. Number 9, Crypto Miso. Investing in cryptocurrencies without checking the development of a particular coin is probably a bad idea. You could be investing in a dead project. Since cryptocurrencies are software protocols, they can eventually die if not developed, maintained, and improved. Therefore, keeping tabs on the development of particular crypto projects is vital. It's pretty easy to track them on GitHub, but you can't track all the cryptocurrencies one by one. That's why you need a crypto research tool like CryptoMiso. CryptoMiso is a research tool that ranks cryptocurrencies based on activity on GitHub. You can check the number of commits and individual crypto projects that has done with a certain period based on the most popular repository. For example, as of this writing, Bitcoin ranked the 5th most valuable cryptocurrency in developing its platform. Number 10, Skew. If you're interested in cryptos and derivatives, Skew Analytics might be the perfect fit. It's a data analytics tool that combines information from top derivative exchanges like Bybit, OKX, Binance, and FTX on a single screen. The platform has a ton of interesting data that you can get value from. So what's the takeaway? Well, crypto research tools are important for any investor. Before putting your money into a particular cryptocurrency project, familiarize yourself with one or two tools. These tools will give you insight into the price movements for any crypto project. What's good to know? Well, using crypto research tools doesn't guarantee profits. Instead, they are meant to help you make informed investing decisions. So while using any of these tools for the first time can be overwhelming, once you get the hang of it, you'll be able to make the most informed investment decisions you can make. So yes, the top 10 best crypto research tools you must have as an investor. Take a look at the description below. So again, let's wrap up today's Dave's Daily Crypto Take with, again, our coin market cap. So at number one, we got BTC at $40,000, and number two, Ethereum at $2,500, Tether at number three with $1, Binance Coin at number four, $361, Cardano number five at $1.54, Dogecoin number six with 31 cents, XRP at number seven, 86 cents, USD Coin $1, Polkadot at $23.91, and last, number 10, Uniswap at $23.18. So there you have it, everyone. Again, this is Dave's Daily Crypto Take. Thank you again for listening all the way up to the end. And please like, share, and subscribe. And I'll see you in the next one. Have a great day. Thank you very much.